Hey, Craig.
Hey, good morning. How you doing?
Good, Dan. How are you doing this morning?
Good, good, good. Ready to go?
Good deal. Good deal. We've already got some folks in the waiting room here.
All right.
Leave them there for a few minutes.
All right.
Do you have your PowerPoint there, or do you
I
want?
do.
Okay, so let me do this. Let me make you a co-host. All right. And then once you're a co-host, at the bottom of your screen, you see a share screen there at the bottom.
Let's see. Let me open this all the way up. Got it. Share screen. Yep.
Click on that.
Okay.
And then it should show your computer monitor with the PowerPoint on it.
Yep.
All you have to do is click that and you're ready to go.
All right. So I'll wait till we get cranked up before I do that.
Yeah, that's fine.
All right.
There's
Perfect.
Margie Williams. She's taking the class, legal or density.
Okay.
And there's Paula. We'll get her in.
I went through and looked at the list, and about half of them are State Farm people.
I noticed that. Yeah. You did a good job marketing, man.
I guess so.
You're in charge of advertising every month or every time we do one.
A lot of, hey, Paula.
Hi.
Let me make
Amazing there's that many people want to hear me talk.
I know I don't. Oh, I'm just kidding, of course.
Yeah.
All right, Paul, I got you as a co-host as well. I've already brought Craig up to speed about how to show his screen with the PowerPoint, and I'm going to leave it up to you in terms of admitting people. So,
Okay, I am trying to get my headphones to show up, and I'm having trouble with them.
All right, so Paula, you're going to monitor the chat while Tom's doing the introduction. And then Tom, are you going to monitor the chat after that? Is Paula going to continue to monitor?
yeah, what we'll do here is when Paula gives me the heads up in terms of we're ready to go, then I'll kind of kick it off with some announcements and eventually getting to you with your bio, Craig. At
Okay.
that point, I will start monitoring the chat for questions related to the topic. Paula's going to monitor in terms of CE administration. Hey, I don't have my form, and okay, here's where you get it, because that kind of stuff comes through on the chat as well. So
Okay.
I'll handle the class-related questions or comments that come through for you. And
Okay.
how I typically handle that is I'll wait to a place where you might pause and kind of jump in with a question.
Okay.
So on and so forth, if that's all right with you.
Yeah, I think what one of us should tell the people at the beginning is there's a bunch of people on here, so please put your questions in the chat. And if we don't have time to get to your questions, because there's a lot of material to cover today, at the end, I'm going to throw my contact information up on the screen. I got a Microsoft Word I'll throw up there. It's got my name and my email address on it.
Okay.
That they can email me with questions. And also, not in the PowerPoint, I'm going to throw up, when we get to the legislative part, Tim's synopsis of the House property bill.
Okay. Good.
So those are two extra things I'm going to throw up at the end.
That's fine. Whatever you need to do. And it sounds like you've got plenty of material to go the full 50 or 55 minutes.
Yeah.
For sure. Okay.
Yeah.
That's good to know. And I'm going to tell everybody to mute their microphones as well, and to communicate through chat. Paula may need to talk to him a little bit in her part here. And we're also recording this as well, Craig, in case we want to keep or use it later as well. So we can edit from that. All right, Paula, I'm going to let you, Paula, why don't you just tell me when it's okay to begin my announcements and get the thing rolling when you're comfortable with the administration. Is that all right?
Yep. Why don't I go ahead and let the 13 people in?
All right.
I sent them a message to please make sure their full name appears, and nobody's changed it. So I'll have to talk to them.
You mean like QFZK?
Good morning, everyone. If your full name does not appear on your picture video, please go to the top right corner of your picture. There are 3 dots. And when you hit that, there'll be a drop down and you can rename yourself. So for example, QFZK is never going to tell me your name. So I definitely need you and Buka and Era5 and AA Ron to please, and Scott, I believe we have more than one Scott signed up for this today. Same thing with Roger. I believe there are a couple of Rogers, so I need last names. Thank you. I appreciate it.
Good morning, everyone. We'll begin in a few moments. Give Paula a chance to handle the administration here, so just stand by. Thank you.
Hi, this is Paula speaking. And if your full first and last name are not appearing on your video or picture, would you please make sure that it is? Go to the top right corner of your picture and you'll see 3 dots. Click on that. There's a drop down and you can rename yourself. I won't know who you are because we have multiple people with the same names. So I need your full name there so I can make sure you get credit for this class. Roger, you're one of the people. I need your last name. If you want to just tell me your last name, I'll rename you.
It's Campbell, like the soup.
Roger Campbell, thank you. And same thing goes for Buka. If you want to tell me your last name, I can rename you from here, or your full name even. Okay, it looks like Buka may be changing his, no, he's not, but maybe he's not listening right now. Somebody's got a phone number here. I need your full name. If you would, 941-748-2886. What is your name? Okay, I'm not getting an answer. And that person may not get credit for the class if I don't. Let's see, when I renamed Roger, it didn't take for some reason. And let's see, we've got more people in the waiting room. I will admit them. Ken, if I could get you to put your last name down, because I have more than one Ken who should be taking this class. I also have a phone number here, 407-344-8100. I need your name. Carrie Clinton. Thank you, Carrie. Same thing for this non-forward area. I need full names.
Can anyone hear us?
I can hear somebody. Who is that?
Okay, we need to mute our microphone. This is David Strohmeyer's computer.
Okay. Is it
Yeah.
just you
Well,
watching?
and the thing too, to let them know on that we do differently than everybody else is, one, we cover personal liability.
I'm muting those, Paula.
Okay.
And just a reminder to change your name on the screen, just put your cursor over your picture, and 3 little dots appear in the upper right hand, and click those 3 dots and then go to name change.
Yep. Because if I don't see your name here, I can't count you as attending and you won't get CE credit for this class.
Your title here, do you see me on the paperwork?
I have no idea who to email it to if I don't know your name. I'm only emailing the paperwork to the people who actually attended. We have 118 people registered for this class today, and I know there'll be a fair number of no-shows. So I can't have phone numbers, I can't have nicknames, I need your full first and last name to appear.
Well, my first and last name is there.
If anybody doesn't know how to change their name and they just want to text me in the chat box, I will change it for you.
Blue 5000 is Karen Wolf.
I'm sorry, who's Karen Wolf?
Blue 5000.
Okay.
Again, just a reminder to mute yourselves, please. Craig, I may have to click the mute all tab at some point. If so, you may need to unmute yourself during your presentation.
Okay, not a problem.
If I can't tell where the noise is coming from.
Okay.
If
For people,
Click on the participants, it'll show you which microphones are still on, so you can just click on those if it's easier.
Yeah, well, I got 100 people to look at here. It may be a little more difficult, but thank you.
it's a lot. If you just came in and you didn't hear me saying, I need your full name to appear on the screen here. So John, that's not going to do me any good because we have several Johns signed up today. BK, if you could put your full name so I know who that is. Same thing for VABJ6N and anybody who has a phone number. Click on your screen, you'll see 3 dots in the top right corner. Click on the 3 dots and then you'll see a rename option. You can put the new name, put your full name in there.
And you need to release the waiting room a little bit there, Paula.
Oh, yep, I see there's 3 more people in there.
Folks, sorry about this for the administration. It's important though. We want to make sure everyone gets their CE credit. We'll be starting in just a moment here.
Yeah, we have 70 people in the room, so if you have a phone number, a nickname, anything other than your full name appearing, I need you to change that and put your full name. Let's see.
VAB.
0, exit, star.
All right, we'll be starting in just a moment, folks.
Looks like almost everyone's given me a full name. I still have a phone number here starting with 941. I have somebody BUP2. I need to know who you are. Another phone number 786. I need to know who you are. And let's see, I think other than that,
You can probably access the rest in the chat feature privately there, Paula, I believe.
okay, so please monitor the chat. I will be sending individual messages to people. And I believe, is somebody still in the waiting room? I'm not in the waiting room anymore.
All right, are we ready to go, Paula?
We're all set.
Okay, thank you very much. Good morning, everyone, and thank you for being on this morning's continuing education class sponsored by NAPA Florida. And we apologize and also want to thank you for your patience regarding the administration for CE using the Zoom platform. It gets very, very informal there a little bit, as you could tell. But it's important. We just want to make sure that everyone on the call, in the class this morning, receives their continuing education credit, and that administration is necessary in order to be approved by the Department of Financial Services. I'm going to ask everyone to mute your phones, please, or mute your. All right, we're going to have to mute all. Craig.
Okay.
All right, Craig, if you'd open up again, there you go. All right, taking care of that. So at any rate, a reminder that all questions and comments will come through the chat feature. I'll monitor the chat feature throughout the class and get the questions to Craig as he makes his presentation. So for any questions or comments, please use the chat feature. Check the chat feature once in a while. Paula may be sending you a message privately regarding your CE credit or your registration, and we want to make sure that's in place as well. This is a Department of Financial Services approved continuing education class for general lines licenses, property casualty licenses. If you have a life only or a health only license and you don't have a property casualty license, you will not receive CE credit for this class this morning per the Department of Financial Services. Just want to remind you of some upcoming NAFA Florida virtual CE classes in addition to the one this morning. On April 23rd at 11:30 a.m., Why Permanent Insurance is a 2-hour class for life licensees, and that's presented by NAFA Central Florida there, Paula. So there's a little plug for your class. People, all of you around the state are invited to the presentation by NAFA Central Florida for their 2-hour class, April 23rd. May 4th, a class entitled Health Insurance. The Federal No Surprise Act is a 1-hour class for health licensees, presented by NAFA Florida's Health Insurance Chair, Craig Rodriguez. There's a video clip that we have available on the registration page. Folks, if you're in the business of health insurance and you're curious about what these new executive orders that have been signed and some of the other legislation that's been passed regarding health insurance recently, you have got to get into this class. It's a fascinating topic. A lot of changes coming down, right, Craig? A lot of stuff happening with health insurance, and you need to be aware of it. And Craig Rodriguez on top of it all. May 19th, both NAFA Broward and NAFA Tampa are offering virtual Zoom classes as well. Broward is inviting the rest of the state, all of you, to a 1-hour class on disability on May 19th. Tampa on May 19th is also having their 5-hour CE day with a variety of topics. There's many more professional development opportunities available from NAFA Florida. In addition to the ones I've just mentioned, many other Zoom platform opportunities there for by way of our local chapters around the state and here at NAFA Florida. But visit nafaflorida.org, click the Get Involved tab on the homepage, and then click Calendar of Events. It's all right there. If you're not a member of NAFA Florida, we'd love to have you join the association. We help you grow your career. We help you build your business, increase knowledge, and enhance your skills for top performers who are civic minded. So go to nafa.org, click the membership tab, and then click Why Join. Ladies and gentlemen, it's my pleasure to introduce to you at this time the presenter of today's class, Craig Duncan, who happens to be the president of our association. Craig is of course 2021 NAFA Florida president. He's been an agent with State Farm Insurance since 1987 in Clearwater, and he's a member of NAFA Tampa Bay local chapter. Craig served as government relations chair for NAFA Florida from 2008 to 2012. He's the founder and a current committee member of the Committee of Florida Agents, an advocacy organization made up of State Farm agents. Craig was a member of Citizens Property Insurance Review Task Force from 2004 to 2005. In addition, he's a member of the Citizens Property Agents Roundtable and has been since 2014. So as you might guess, Craig is extremely involved in public policy with the Florida legislature. He's a qualifier for MDRT and Chairman Circle Ambassador Travel multiple times. He's also a life and longtime volunteer for Ducks Unlimited and it's a wetlands conservation group, of course. He's married to wife Barbara and has 3 children and 3 grandchildren. Folks, you are really going to enjoy today's presentation. I've seen the PowerPoint, and Greg and I have talked, and this is going to be a very, very interesting presentation for you today. So Craig, I'm going to turn it over to you now.
All right, thank you very much, Tom, and good morning, NAFA, Florida. Thanks for joining in. We got a lot of information to cover today, so hold on, and we'll get through it as best as we can. It's a lot to cover in a short period of time, but we're gonna make a stab at it as quick as we possibly can here. So yeah, what is this about? You know, what the heck's going on with the Florida insurance market? We're seeing homeowners rate increases 30%, 40%, 70%. I had one instance that was reported to me where a policy went from $1,500 last year to $5,500 this year, and it's ex-wind. So you can't blame the cost of reinsurance or hurricanes on it. So there's a lot of things going on in the market. There's legislation in there to introduce it. We're going to go through all of that. There is an outline, but quite honestly, all of this stuff flows together so much that we're actually going to be hopping around quite a bit in this. But we are going to go over a little brief overview of what the situation of the market is right now. We're going to talk about reinsurance markets, litigation cost drivers, court decisions that have led to some of the cost driving that we're seeing, and the outlook in the Florida legislature as we are in the middle of a legislative session right now. So anyhow, the health of the Florida insurance market, there's no better way of judging the health of the Florida insurance market than looking at Citizens Property Insurance. As Tom mentioned, I sit on the Agents Advisory Council. It's called the Agents Roundtable for Citizens Property Insurance. So once a month, we get to visit with the executives from Citizens, go over what's going on in the market, and some of the changes they're bringing forth and so forth. I also sit in on the Citizens Board of Governors calls, which are monthly, and they are long calls. Sometimes they're as much as 6 hours, so I don't sit in on all of them. But one of the most recent ones I sat in on, Barry Gilway, the CEO of Citizens, had a very good PowerPoint on the status of the Florida market. So with Barry's permission, I absconded with his PowerPoint. We're going to use that quickly as we start this thing up. So I'm going to share my screen here real quick and get going here and pull up this PowerPoint, which is right here. So anyhow, this was the presentation. Well, first of all, this is the course that we're giving right here. And it deals with the Florida insurance property market. There's no quick fix. Last year, 56 Florida insurers posted a combined $1.6 billion underwriting loss. So as we begin to look at policies in force for Citizens, and the PLA is their personal lines account, that's the blue one here. Coastal is their wind only, and CLA is commercial, the smallest amount right here. But if you look at 2011, 12, 13, 14, 15, 16, policies counts continued to drop and continued to drop. And then all of a sudden it starts 17 inching up, 18, 19, 20, up to January of 21. And you can see that the difference between January 1 and January 21 was an additional 10,000 policies. Gives you an idea of how fast that Citizens is growing. Currently, they're sitting at 554,000 policies. When they made this slideshow about a month ago, they were estimating 650 by the end of the year. Now they're estimating 750 by the end of the year. That's how fast Citizens is growing. So when Citizens is growing that fast, we do not have a healthy property insurance market. Citizens' exposure is growing even faster than their policy count is. That's even more of a concern, because as we know, Citizens is a state-run organization, and if they don't have enough money to pay for claims, they can assess their own policyholders, and after that, they can go into the private market and assess the private market. So it's not healthy to have a growing Citizens and this much exposure that sits out there. If you look at changes to policies in all forces and all lines, you can see that from January of 20, February, March, April, May, June, July, you can see what's happened to new business. Sagged down a little bit, but now picking right back up again. And of course, this January one is just through the 22nd. So this is new business coming in. So we went from 6,600 new policies coming in January of 20 to 17,000 through just 21 days in January of this year. So once again, not a good situation, not a healthy situation. 91% of all Citizens HO3 policies are charged less than the average competitor's rate. Why is this? Well, rates by most private carriers are set by actuaries. Citizens' rates are set by politicians. So that's a little bit of a joke. Citizens does have actuaries, and they do file for their rates, but politically they cannot raise their rates more than 10% in a given year. There is some legislation kicking around this year that would lift that for new business, where new business coming in would not be subject to the glide slope and possibly even rental homes and vacation homes. But that legislation is a long way from the finish line, and I wouldn't count on that being there. But in any case, you can see that Citizens is growing. They are the most competitive in many markets right now, and that is the reason why. Now we're going to talk a little bit about litigation, okay? Litigation, which is the 800-pound elephant in the room. In 2013, all insurance companies, including Citizens, had 27,000 lawsuits filed against them. Okay, in 2020, that is 85,000 lawsuits. Okay, the Tri-County area presented 63% of all the lawsuits back in 2013. Now it only represents 45% because of the creep that we're starting to see all around the state of lawsuits coming from everywhere. This is an interesting slide. So this came out from the Department of Insurance, okay? And this represents the number of claims Floridians charge the number of claims that Floridians file nationwide. So in 2016, Floridians charged 7.75% of all the claims filed in the United States. Okay, 2017 and 18, that number was a little higher because of Irma and Michael. In 2019, Floridians filed 8.16% of all the claims in the United States. Lawsuits, they filed 76.45% of all the lawsuits filed in the United States. So despite only 8% of the claims coming out of Florida, 76.5% of all of the property lawsuits filed in the United States were filed in the state of Florida. So think about that for just a minute. That is an astounding number. We're going to dive into that a little bit deeper here in just a minute. This is some litigation trends that we're seeing, and this is Citizen specific right here, and you can see where it peaked and where it came back down. Why did it come down here from Citizens? And incidentally, this is strictly water claims, non-catastrophe water claims, which is where we're seeing, you know, a big chunk of the fraud that's going on. And what wound up happening is they passed Aob Reform, 7/1 of 19 is when it became effective. That is assignment of benefits. Okay, a reform was passed to try to rein in the assignment of benefits that was going on, and lawsuits started dropping from there. Okay, furthermore, from Citizens' viewpoint, this is just from Citizens' viewpoint, not the market in general, but they introduced their managed repair program. And their managed repair program says if you have a water loss and you call us and use our water mitigation people, we will waive the deductible, even if it turns out that it's not a legitimate claim, a claim that can be filed. We will waive the deductible if you send our people. Well, most people have a $2,500 deductible with Citizens, so the fact that you can waive the $2,500 and use Citizens contractors, that got rid of a lot of the fraud in the situation. So it's made Citizens' slope look a lot better in terms of lawsuits that have been filed. Okay, In terms of stable homeowner average premiums, in 2020, 105 rate filings for increases of 10% or more have been made with the Office of Insurance Regulation. In 2016, only 6 OIR rate filings had increases at all. Okay, this is the rest of the state excluding the Tri-County, and it's showing the average premium of policies through this period of time. And you can see that it went up and it actually dropped down a little bit, and then of course it started coming back up again. This is the Tri-County average premium. Okay, and you can see what's happening in the Tri-County area. Now, interestingly, you look, and the average premium is $3,700 in the Tri-County area. It's $17 for the rest of the state. So a lot higher in that Tri-County area, and it is because of extensive litigation being driven down in the Tri-County area. Okay, we go to the next slide here, litigation rate, severity, and frequency. It shows the litigation rate. So what does this mean? This means you take all the non-catastrophe water damage claims that have been filed, and 53% of them in Dade County go to litigation. 42% in Broward, 15% in Hillsborough, 5.7 in Orange, okay? And amazingly, or not amazingly so much, when you look at the average premium for a $500,000 home, over $500,000 home, in Orange County, it's $3,200. In Dade County, it's $10,000. So that kind of gives you an idea of what's driving some of the rates that we're seeing here. This is the highest county litigation rate. Okay, so we had 5 counties up there now. Here's more coming through. Okay, so you can see in this leftmost column the litigation rate, and you can see how some of them are creeping, you know, higher and higher and higher. Shows the severity, which obviously is the average claim paid out. Okay, this is kind of an idea of showing where this litigation creep is moving towards. Okay, now we talk about reinsurance. Okay, so reinsurance is a part of the problem that we're seeing also. Cost of reinsurance, a lot of these Florida domestics are heavily dependent upon the cost of reinsurance. And they are becoming more so, because when you lose 1.6 billion in a year, and that took 570 something million of reserves out of their bank accounts, which means they have to buy more reinsurance. So the need to buy more reinsurance, matter of fact, the trending this year is 15% more sales of reinsurance than what there was last year. Otherwise, the companies are buying 15% more reinsurance than they did last year. And in the meantime, the premiums are up 54%. Okay, so why are they up 54%? We had a very, very, very active hurricane year last year. As you remember, we went through the regular alphabet and pretty much went through the Greek alphabet. And you say, yeah, but Florida didn't get hit that hard. Yeah, but reinsurers don't base it on just what's happening in Florida. They base it on what's happening in the world. So we get to pay for the reinsurance cost here, even if it doesn't hit the state of Florida, which is different from the homeowners market, because in the homeowners market, you have to file rates that are specific to your state. You can't say, hey, we had fires in California, so we got to raise rates on Floridians. It doesn't work that way. The department doesn't approve stuff like that. They tell us, you tell us what's going on in Florida, you show us the numbers in Florida, and we'll approve those numbers. So anyhow, that's kind of the trend that we're seeing in reinsurance and what's driving the cost there as well. Public adjuster and attorney solicitations. Anybody seen one of these? Anybody got one of these? One broken shingle or tile may equal one new roof. Here's how. Okay, so these solicitations are going on all over the place. People are going and knocking on doors. Let us check your roof. We'll see what we can do for you. You know, here's one. After Tropical Storm Eta, we have been helping many homeowners get brand new roofs without any out-of-pocket costs. That's amazing, since most people have pretty big deductibles. Okay, you could be stuck paying $50,000 to $100,000 for a new roof if you do not contact us before September 10th, 2020. Why September 10th, 2020? That's the end of the 3-year window for Hurricane Irma. Okay, Hurricane Irma was September 10th of 2017. So you got 3 years to file a claim, and they're desperately trying to drag all the claims in they possibly can. And the amazing thing is, if you look at Hurricane Irma coming in 2017, there was more claims paid out in 18 and 19 and 20 than there was in 17. So it is just claims manufacturing, giving these people time to run around and find claims and make things happen. Here's one of my favorite. Schedule your free roof inspection today and receive a free dinner on us from Ruth's Chris Steakhouse. Okay, the vast majority of our customers who file a claim get approved for a full roof replacement by their insurance. Okay, so these solicitations are going on all over the state. All right. Financial trends for selected Florida insurers. Not hard to see this. Okay, this is the net income or loss. This is the net underwriting gain or loss. And you can see that 2013, 2014, 2015, pretty good years. 2016, it started turning ugly. 2017, 2018, obviously Hurricane Irma was in here. Hurricane Michael was in here. But then 2019, 2020, obviously heading the wrong direction in a real big hurry. And this figure right here shows net underwriting gain or loss of 2020. That's just through 3 quarters. The 1.234 billion turned into 1.6 billion by the time they got to the end. So we had 4 companies closed for new business, at least 12 companies that have strict underwriting restrictions such as limits on new business or renewals based on location, the age of the home, the age of the roof, required minimum coverage A limit, targeted cancellations. We're hearing this from all over the state. There's companies now that won't even write a home if the roof is over 10 years old. So it's really getting tough, primarily because of the abuse that we're seeing in the roofing side of this business. So that was Barry's slideshow that I wanted to share with you, because that was, I think, a very, very important point to go through. Now what I'd like to do is read a brief op-ed that Barry put out on 4/15, just to show you how things have changed since he did this presentation to the Board of Governors. So I'm going to scan through this as quick as I can, but it's important that you hear what Barry Gilway has to say. How did we move in just 5 years from a vibrant market where financially solid companies competed for business to an unhealthy environment where policyholders who have never filed a claim are being dropped or see their premiums jump by 30, 40, 70% in a year? Last week, we got an answer. The Office of Insurance Regulation reviewed 750 insurance companies from around the country and found that Florida accounted for only 8% of all claims filed nationwide in 2019, but nearly 76% of all lawsuits. That number, taken from data gathered by the National Association of Insurance Commissioners, is not only mind-blowing, but clearly unsustainable unless Floridians are willing to accept levels of rate increases that we're seeing today. So this data came from the National Association of Insurance Commissioners, not from an insurance industry trade group or the industry in general or different carriers. This is information from insurance regulators all over the country, okay? Going on. While the NAIC data is incredible, it's not unexpected. Florida domestic insurance companies posted $1.6 billion operating loss in 2020, the latest of 4 progressively unprofitable years. While storm activity played a part in last year's losses, remember that no major storms hit Florida in 2020. Instead, the major reason for these unsustainable losses is excessive and abusive litigation on a scale that exists nowhere else in the country. Citizens alone last year received 7,599 new litigated claims. During the first quarter of 2021, they received 2,506 new claims. So they're on time for over 10,000 this year. Data shows more than 85,000 new litigated property claims were filed against insurance companies last year alone. Besides raising rates, some companies have stopped writing new policies, while others restrict what they write or reduce coverage on policies they write. In response, Citizens is writing close to 5,000 new policies per week. After reaching a low point of around 420,000 customers just a year ago, we expect to end 2021 with close to 750,000 policyholders. So he has a few more paragraphs in here, but that's the big nutshell of what he had to say. So that was a point that I wanted to bring across. So let's, I'm going to stop sharing for right now and get back to the main screen here for now. And what I want to talk about real briefly is this report that came out from the National Association of Insurance Commissioners. This was stunning, and this is something that the trial lawyers are going to have a hard time overcoming when it gets into legislative issues. And this report was sent to the head of the House Commerce Committee, Blaise Ngoglia, for his review, because there was some important bills up in his committee, including the property insurance bill that's in there, which I'll give you an update on in just a minute. But Florida's ratio of suits compared to claims closed without payment is 8 times higher than the next state. So, you know, one of the arguments of the trial attorneys has been that if you look at Florida and there's so many domestic insurers here and they just don't pay their bills. They just won't pay their claims, so we have to sue them. It's the only way we could get it. So they looked at the data of all the claims in the country that were closed without payment compared to Florida, and Florida tracks right dead on there. So that scenario doesn't really fly. That argument doesn't hold water. But when you look at the fact that Connecticut, if you look at the state of Connecticut, which is number 2 behind Florida, 3.4% of all their claims closed without payment wind up going to suit. In Florida, it's 27.75%, 8 times higher than the next highest state. And interestingly enough, of the 342,000 Florida lawsuits filed against insurance companies from 2016 to 2020, the lion's share have been filed by the same 25 law firms. 71% of the $15.2 billion in claim payments that were paid from 2013 to 2020, 71% of the $15.2 billion went to plaintiff attorneys. 8% went to policyholders. So you look at the lawsuits filed on property claims from 13 to 20, and it totaled, the awards totaled $15.2 billion, and 8% of it went to the policyholder. 71% went to plaintiff attorneys, 21% went to defense attorneys. So this, folks, is basically unsustainable. So what Commissioner Altmaier had recommended is, he said we have to reform Florida's one-way attorney fee statute that incentivizes litigation that's not always legitimate. Number 2, address the ramifications of the Joyce decision regarding contingency fee multipliers that allowed Florida courts to diverge from federal standards. Number 3, address the ramifications of the Sibo decision regarding concurrent causation that have incentivized roof claims solicitations. And number 4, include provisions from legislation recently enacted in Texas on pre-suit notice and inspection requirements. So we're going to drill down on each one of these topics one at a time here, okay? Starting with reform Florida's one-way attorney fee statute. What do you mean? What is a one-way attorney fee statute? Okay, so in law, basically, every party pays their own attorney. Okay, so if you sue somebody, you pay for your attorney, they pay for their attorney, and that's the way it works out. Unless the parties agree to something different, or unless there is legislation that calls for something different. And in Florida, I would say only in Florida, but there may be 1 or 2 other states, but in Florida, there is a one-way attorney fee statute. And it basically says that if I sue my insurance company, and my insurance company's offered me $30,000 and I get awarded $30,001, $1 more than what my insurance company offered, then the insurance company has to pay all of my fees as well as their own fees. It's a one-way attorney fee statute. The public policy for putting it in place was so that the poor little widow homemaker that's fighting the big, huge insurance company, you know, stood on an equal fair ground. Well, obviously, you know, what has happened is that, and we saw this under the assignments of benefit problem that we had was that companies were suing companies and using the one-way attorney fee statute. So the problem is that incentivizes creating claims where no claims exist because you can run up huge law bills. So that is the one-way attorney fee statute that we've been trying to fix in the legislature for a number of years. So address the ramifications of the Joyce decision regarding contingency fee multipliers. Okay, what is the Joyce decision? There are two big Supreme Court decisions that have really driven this problem. And they were made by the Florida Supreme Court, the last Florida Supreme Court, not the current one. The Supreme Court, before the three appointments that were made by Governor DeSantis, was probably the most trial bar friendly Supreme Court in the United States. Whenever the legislature passed anything to try to rein in the costs that had anything to do with reining in legal fees, the Supreme Court ruled against it. They basically threw it out. So there was no way to really reform any litigation in Florida because the Supreme Court would throw it out. Now they've replaced 3 justices that had to retire because of age. You have to retire at age 70 in Florida. They replaced them with 3 that are changing that, but these decisions go back and are still haunting us today. So the contingency fee multiplier that we talked about is referred to as the Sibo, as the Joyce decision. I'm sorry, the Joyce decision. This was decided in October of 2017, and basically Florida diverges from federal standards in its awarding of contingency multipliers. Multipliers increase attorney fee awards substantially. So where did contingency multipliers come from? They basically go back to the civil rights years. Okay, if you go back to the civil rights years, attorneys didn't want to take on civil rights cases. They just didn't want to. Juries, they felt like juries were stacked against them. They got death threats, everything else. Nobody wanted to do it. So they came up with this theory of contingency fee multipliers. Let's get attorneys an opportunity to make a lot more money than they typically would if they will take these tough cases on. And it was certainly needed back in civil rights times, but not needed at all in the Florida property market. There is no shortage of attorneys that will take property claims, and certainly these are not complicated claims that they are taking. But anyhow, what it does is the general, as I mentioned, for the general law of American law, is that each party is responsible for his own attorney fees. This statute shifts fees to the insurer if the insured wins. Okay, so not only you're shifting the fees to the insurer, but it goes further to say that if it's deemed to be a complicated case, a contingency fee multiplier could be put on it. They could be awarded 2 times their normal billing or 3 times their normal billing. And there was a case, this Joyce case that came out regarding that basically the 5th District Court of Appeals said in the Joyce case, this is not a complicated case. We see no reason why there should be a multiplier put on, anything like that. So they threw out this attorney fee multiplier to have been put on by a lower court. And basically the Supreme Court came back and said contingency multipliers do apply in any case, or can apply in any case, and it's now become the normal practice. So there you go, a $38,000 legal bill turns into 2 or 3 times that because of the award of a contingency fee multiplier. And because of that award of the multiplier, it incentivizes more and more lawyers to take on more and more cases that may not have merit. Okay, so that deals with the Joyce decision. Okay, the Sibo decision regarding concurrent causation is another problem that we have. So what is that? Okay, the Sibo decision came down December 1 of 2016, and it has basically incentivized roof claim solicitations based on the Florida Supreme Court's holding, which apply the concurrent causation doctrine. So what does this mean? Okay, it means I've got a 25-year-old shingle roof, and it's needed changing for 10 years, but I keep doing a patch here and a patch there because I really don't want to pay for it. And I'm hoping I can get the insurance company to pay for it. And lo and behold, here comes a storm one day that has BB-sized hail in it, and hail hits my roof for about 30 seconds. And a week later, there's a guy knocking on my door with a ladder and says, hey, if you'll let us look at our roof, we might be able to get a new roof for you. And they go up there and they say, yep. We find that there is one shingle here that was damaged by hail. We have evidence of one shingle here that took hail damage. So basically what this decision says, the Sibo decision, is that if that one shingle, okay, caused a loss, we have to replace the whole roof. Despite the fact that the roof is 25 years old, 99% of the problem is the roof's old, it needs to be replaced, but 1% here was caused by an insured loss, and because of that Sibo decision, the concurrent loss, we have to replace the entire roof. So that's what he means by the Sibo decision when he talked about the incentivization of that. And then his last point, the provisions of recently enacted the Texas on pre-suit notice and inspection requirements. So these figures are in a bill that's being run this year. And we are going to review that bill in just a moment because it has some important provisions in it. So as we see, the market is currently in a mess and heading towards a meltdown and heading towards a crash. And so what can we do to fix this? Okay. And incidentally, there's one other piece I do want to share with y'all. So I'm going to share my screen one more time because there's one more piece I do want to show you. So this is from my buddy Scott Johnson. Scott used to run FAIA, the Independent Agents organization, and he retired a few years back, and he has a blog. And actually, this is a repeat of another blog that was done by Peter Schorsch. Peter is a blogger in St. Pete, and actually, according to the Washington Post, writes the best blog in the state of Florida. Very, very good. Follows a lot of politics and things like that. But the lawyers that launched 1,000 lawsuits. So if Helena Troy is the face that launched 1,000 ships, we can call South Florida attorneys Kevin Weiser and Anthony Lopez the lawyers that launched 1,000 lawsuits and counting. Okay, so it's only mid-April and already Florida's on track for a record-setting year of property insurance lawsuits. Now, one of the things that's drawing all these lawsuits right now is the fact that there is legislation out there to put an end to it. So the race is on to get as many lawsuits filed as you possibly can before that legislation may or may not come into fruition. Okay, so the big property bill is being pushed by a good friend of mine, Senator Jim Boyd, another good friend of mine, Jeff Brandis. Okay, they've been pushing this year. And once again, they come in and say that the Office of Insurance Regulation reported that 76% of all litigation in the country comes out of the state of Florida. There's a lawyer, Scott Strems, that has been stripped of his law license and is up before the Florida bar. It's actually going all the way to the Supreme Court to see if they uphold the suspension by the Florida bar over fraudulent homeowners litigation and other violations. So this guy was the #1 filer of these. He's gone now. So where is all this coming from? And they came in and said, according to data from the Department of Financial Services, okay, for the months of January through March, 22 lawyers and 3 administrative assistants filed over 200 lawsuits each. 15 filed more than 300 each. 8 filed over 400 lawsuits, and 2 filed over 1,000 lawsuits on property insurance in a quarter. Okay, so that kind of stands out there as the big problem with litigation and how it's ramping up so fast. And these attorneys have this PAC, the Consumer Protection Alliance PC, which sounds so wonderful, and really what it is, it's a front for the trial bar. But they donated more than $500,000 to elected officials in Tallahassee and political committees and so forth. So anyhow, that's going to get down to the problem with getting litigation or getting legislation, good legislation, through the legislature.
Hey,
Okay.
Craig,
Yes,
got one question for you. Pardon the interruption.
yes.
John Kasich asked, did the AOB legislative changes from last year help at all?
Yes, yes, they have. But what has happened, the AOB, what it did was it shut off the third-party lawsuits. So the water restoration company that was suing the insurance company when the homeowner didn't even know that a lawsuit was existing, those situations have gone away, okay, largely because of the AOB legislation that passed last year. So what did the attorneys do? They shifted from third-party litigation to first-party litigation. So now what happens is the roofers, when they contact the policyholder, we're going to get this taken care of, but you're going to have a law firm involved. So we've got one all set up for you and everything. So it's just shifted to first-party lawsuits. So, the Florida property insurance fraud market, as I call it, has been a whack-a-mole my entire career. If you go back to 2000, there was an explosion of mold claims. They were having to bulldoze houses because of mold exposure. People are getting sick from stachybotrys and all this sort of stuff. And basically they limited mold under the policy because it had run so nuts, and all of a sudden the mold problem went away. And then houses started falling into the earth, and we had this massive sinkhole problem. And I know Citizens in 1 year lost $250 million just on sinkhole claims, and it became an industry crisis. They changed the sinkhole laws, and sinkholes largely went away. Then we started having water pipes break in South Florida, and the big AOB crisis. They fixed AOB, and now we're going to first party claims and roofing claims and things like that. So it's a constant battle that we have to deal with, and it just is what it is, unfortunately, and it's the way our state works. So I am going to real quickly jump over and grab one more piece of one more document here, and that is the property bill summary that's running right now. So let me open that up so everybody can see that. And shift it back over to this screen. And this is the summary of the property insurance bill that is up right now. Okay. This synopsis is done by our own Tim Meenan, our esteemed lobbyist, and does a great job of nailing down what's going on here. So this has already passed the full Senate. So it had passed the Senate 27-13 last week, and now sits in the House. It was supposed to be heard in the House Commerce Committee yesterday, and it got temporarily postponed until Friday. Okay, so it has passed the Senate. It still has the committee stop to get through in the House before it gets to the floor there. There are pretty substantial differences in the bill. As an industry, we like the Senate bill a lot better than we do the House bill. The House bill is we consider a lot weaker than the Senate bill. The House can just take up the Senate bill and vote on it. And when you get late into the session like this and horse trading starts, that's where you find out how bad does the Senate president really want this? And what does the House Speaker want that he can trade off for? You give me this, I'll give you this. And this is how horse trading works at the end of the session. But anyhow, this is basically what it does. It eliminates the attorney fee multiplier, unless it is a rare and exceptional case. That's the biggest part of it right there. It also amends roof coverage provision through the use of a roof surface reimbursement schedule. Okay, so if you think about this, if you have a 10-year-old car and it's titled and it's totaled, you have an accident, it's totaled, you get a brand new car? No, you don't. Okay, you get the value of that 10-year-old car. Okay, when I first started in this business 100 years ago, we didn't have replacement cost on roofs. We had actual cash value. So if your roof was 10 years old and it was a 20-year roof and you had a loss on it, we basically paid half of it. And what's being negotiated in here is that companies have the right to offer. Okay, it's not mandated companies do this. They have the right to offer a schedule where they can say, all right, if the first 10 years, if you have a roof loss, we're going to pay replacement costs on that roof. After that, it's going to be on a sliding scale that's going to go down every year to 70% for metal roofs, 40% for tile or clay, concrete roofs, 40% for wood shake and shingle, and 25% for all other type of roofs, which of course the asphalt shingle is the most popular one on here. All right, I'm seeing that you can't see the bill. So let me,
And while you're doing that, Craig, we did have another question from Keith Williams, and he asked, is House Bill 305 a good way to deal with these issues?
okay, I would tell you that Senate Bill 76 is a very good way. House Bill 305 is a lot weaker. I am going to stop sharing, and then I'm going to share again and pick that screen up one more time and see if we can pick it up again. Now are you seeing the bill? Okay,
Yes,
very
got
good. All right. Sorry about that little technical difficulty. So anyhow, this is the roof schedule right here. Okay. So basically what that does, it gets the roofers from going to these neighborhoods and finding old roofs and talking them into getting brand new roofs. If they got to pay for half of it or 75% of it or whatever, it's going to disincentivize them from going after that. Okay. So also it says right now, you've got 3 years to file a claim after a hurricane. Everything else is 2 years, but hurricanes are 3 years. This takes it down to 2. Reason for that is to try to slow down the mining that goes on in that 3rd year of people trying to create claims that did not exist and drag it back in. Okay. But a big part of the provision is what they call this Texas style, okay, attorney fee reform. And that basically breaks it out like this. It says if there's 2 parties suing, okay, there's an 80% rule. So if I'm saying it's worth $1,000 and you're saying it's worth, and I'm the insurance company and you're the policyholder and you're saying it's worth $2,000 and it's awarded at $1,800 or higher, 80% or higher, then I've got to pay your attorney fees. Okay. If it's awarded at $1,200 or less, 20% or less over mine, then you have to pay my attorney fees. Okay. If it falls in the middle, we split the attorney fees. Okay. So that's basically what it says. So it says we're going to get these cases out that somebody's suing over $10 or $200 or whatever, you know, that really don't merit going to court. The only reason it's being filed is to run up huge litigation fees. And it's going to say, okay, well, this, you know, it's not close enough for us to take this to suit. Let's go to mediation or whatever and settle it instead. Or, hey, if this company's really way off the mark, we're going to get our fees. Let's go after this one hard. But it sets up a way of splitting those fees out that makes it less incentivized for somebody to go after that. Okay. So that's the big provisions under the bill that will change things. As I mentioned in the House, the bill is currently a lot weaker. We're hoping that when it gets into commerce on Friday, it will be amended to bring some of the things a little closer to what they are in the Senate bill. Okay. This goes through and talks about the differences in the House bill, but due to time, we're running right up against time right now. So I don't want to get too deep into the woods on what the House bill says. The Senate bill is a good bill. We think it would solve a vast majority of the problems that are out there. And that's what we're pushing to head towards is that particular bill right there.
Craig,
Okay?
I got another question for you here, if you don't mind.
All right.
This is from Michael Long, and he says, Craig, what are some of the non-admitted carriers in Florida and their provisions doing in driving the rest of the industry to make changes to their policies?
Okay, well, the non-admitted part of the industry does not have to file, you know, rates and coverage filings and whatnot with the Department of Insurance, the Office of Insurance Regulation, like admitted carriers do. Okay, so that's where you get into, you know, policies that excluded sinkhole and cat ground collapse, for that matter of fact, out of the non-admitted market. Okay. What effect is it having on current policies? I don't know that the action of the non-admitted carriers, and this is opinion, but I don't know if the action of the non-admitted carriers has that much influence on the admitted carriers. I think the coverage changes we're seeing in the admitted carriers are basically out of necessity because of their financial situation that they're running into with the proliferation of lawsuits and claims that don't really exist. Okay, I think that's primarily what's driving the changes in their policy, a lot more than the action of the non-admitted carriers. So that's just my personal opinion. Are there other questions, Tom? Because we are at the Q&A section here. So
Yeah, and that's fine. I don't show any yet here, Craig. I'll
Okay.
pass along. Don't worry about time. You're good to go here.
all right. What I'm going to do is I am going to put up my contact information here, because if you have other questions and you want to contact me, I want you to be able to reach me. So can you see that, Tom?
Yep, we got it.
Okay, very good. So if you are outside of the State Farm Network, you can email me, craig@cduncan.net. If you are inside the State Farm Network, you know that redirects don't work. So BXNI, Bravo X-Ray November India, is my alias, and I know about half of the people in these calls are State Farm agents. So that's where you can reach me with questions that you might have. All right. So that kind of sums up the part that I was trying to get to today. That's the outlook in the legislature. It's a stand of where the market stands right now. It's a little description of reinsurance markets. And one of the things I didn't mention in the reinsurance markets, we talked about how reinsurance works and the cost drivers and the dependency of the Florida domestics on the reinsurance market. But there is a Florida CAT fund. Okay, the CAT fund is run by the state. It sells reinsurance to domestics or citizens, national carriers, whoever wants to buy from it can get it at below market rates, but there is a limit to how much you can buy from the CAT fund. But the CAT fund does help control reinsurance rates to a extent, okay, because of its the fact that it's not a free market, it's a state-run facility. And that CAT fund has about $7 or $8 billion in it right now, so it's fairly liquid. Citizens, incidentally, their reserves are up in the $7+ billion range, which sounds like a lot until you realize, what a big part of the market they have, which is virtually all of Monroe County, and I think the number's about 54% of the private market in Dade and Broward County. So you take a very heavily populated part of the state that is the most vulnerable for hurricanes, if you look at probability charts, and you look at the amount of coverage Citizens has there, $7 billion could disappear in a big hurry. They could run through in a hurry. Citizens does from time to time buy reinsurance. Some years they buy it, some years they don't. One of the bills out there does deal with making them factor in the rates for it, whether they buy it or not. There's some weird stuff in the bills out there. One of them limits salaries to Citizens executives, which I can tell you in the years I've worked with Citizens, I am highly opposed to, because I dealt with Citizens for years when it was run by politicians. Now it's being run by real insurance people. Barry Gilway has run Zurich. Barry Gilway has run Maryland Casualty. Barry Gilway knows how to run insurance companies. I am a huge Barry Gilway fan. The people that he's hired in there, Carl Rockman, that I deal with virtually 2 or 3 times a week. It came from a background in Allstate. He's very, very good. Marshall Watson, that runs the agency side of it, agency licensing and so forth, is very, very good. So they got some really good people in there, and I'm opposed to some of those things that are floating around there. But anyhow, that kind of sums up the legislation. Any other questions out there, Tom?
Craig, we do have an observation going back to the roofing issue, if you don't mind, from Lee Gordetsky. He says roofs over 10 years old will cost the consumer with the deductible 80% or more of a new covered roof in a hurricane claim. boy, when the consumers learn about this after that first storm we get this year, they're going to be pretty livid, right?
Yep, and matter of fact, when I have talked to legislators this session, one of the questions I've asked them, do you really have the guts to vote for that roofing initiative? Because if I was running against you in 2022, I would say Senator so-and-so voted to take away your replacement cost on roof. And yeah, it's a very tedious part. Now, here's the point though. It allows companies to sell that. It does not mandate companies to sell that. Companies can still say, hey, we're going to sell replacement cost on roofs and that's it. We're not going to mess with this. I expect what most carriers will do is they will have a replacement cost on roof and they will have a roofing schedule. You decide. Okay. So the customer's going to have to make a decision. They're going to have, it's not just automatically going to roll onto their policy. Although I'm sure there's some carriers that would roll them on automatically. But I think most of the carriers won't do that. They will offer it. But yeah, that's a very good point, Lee. I'm glad you brought that up. And that's not in the House bill. It's in the Senate bill.
Right. A message to all of you taking this class right now. Please hang on. I'm going to leave the Zoom platform open for quite some time here in the next few minutes because you do need to sign the sign-in form, which Paula has sent you in the chat feature. You can download it there. And so we're going to keep the platform open here for quite some time. No worries about hanging up in a hurry. We're not going to do that to you because you may have questions of Paula, so on and so forth. Craig, I wanted to get that message in before we let you go. Any other questions? Any other thoughts from anyone? And
This is Paula, and I just want to let everyone know I have put the sign-in form in chat. If you cannot download it from there, don't worry. I will be emailing it to everyone shortly after the class ends.
okay, there we go. There we go.
Bite to eat.
All right. Before we let Craig loose here, any other questions? Any other thoughts? I'm looking at the chat feature. Michael Long did ask Craig if the reforms that you mentioned there a few moments ago will bring the rates back down, or is it just going to set a new floor in premium rates?
I think it'll absolutely bring the rates back down. When you look at the cost factors that's driving everything right now, and this is still a competitive market. The Florida domestics have to compete not only with each other, but with citizens. Because when they raise their rates, everybody just cancels and runs back to citizens. So, you know, they know when they raise their rates, they lose policyholders back to citizens, if not to their competitors anyway. So it, you know, when we get that massive litigation part out of it, which is a lot bigger driver than the cost of reinsurance. But when we get that part out of it, if we can get that part out of it, it will cause rates to come back down, I believe, absolutely.
Okay, I think that'll do it for you, Craig. Thank you for all your knowledge and your wisdom and your teaching skills. We really appreciate you. We appreciate you as NAIFA Florida president. As most of you know, I know you folks with State Farm, you know how well connected Craig is to the legislative and regulatory process here in Florida. We see that with him as president of NAIFA. So we just very much appreciate all that you're doing, Craig, not just in terms of service to NAIFA and to State Farm, but what you're doing for the industry, quite frankly. So that's very much appreciated. We did record this. Craig, we may have to run this again. I've received several messages in the chat feature here about how helpful this has been. So the reviews here informally are quite positive about this particular CE class. So we appreciate it. Like I said, Paula, I want to thank Paula Keys. She helps us with administration of our classes, as you know, and she also happens to be the association exec for our NAIFA Central Florida Association chapter. So thank you, Paula. Paula, I'm going to leave everything up here. I'm not going to turn the Zoom off yet. If you think you're finished up with everything here as an attendee, feel free to log off. Otherwise, we'll stay on until everyone's questions answered or any issues regarding your CE credit. So Paula, I will turn it over to you though for administration. Regarding myself, thank you all very much. I'm CEO of Nathan, Florida, Tom Ashley, thanking you for being on this class today, and hope you have a good one. Paula, I'll turn it back over to you now.
Yeah, I do have a couple of people who I could not identify. 3 people were signed on with phone numbers. If you could put your full name in the chat, that would be helpful. Somebody is signed on as CP6G. Somebody has N381S4, and I have FL28220. So I cannot identify any of you, which means unless you're able to get the form from the chat function, I have no way of getting it to you because I don't know who you are, and thus I don't have your email address. Other than that, I don't have anything. Does anyone have any questions of me? I'm going to see if I can unmute everyone. Let's see.
Yeah, let's unmute everyone at this point.
Yeah, maybe we could unmute people.
Yes, now they can unmute themselves.
Hi, Paula. This is Ann Wiley. I wasn't sure. I can't seem to find a way to get that form. So will you just send it to me by email? Oops, hello?
Paula,
this is Lee Gorodetsky. Same thing. I did a copy paste. I tried sending you something. Lord knows, it wasn't letting me print this. And I couldn't send it back. So I did a copy paste. Hopefully it's good.
Paula, you're muted, by the way.
Yeah, and I'm in the same boat as well, guys.
Yeah.
Darian Ward here.
yeah, we're having the same issue even with the sign-in sheet.
Yeah, I didn't have any notice of that.
I was
Hey,
muted.
Paula.
Yes.
I'm trying to figure out how to use the chat, but I'm the FL28220, and this is Craig Bost, B-O-S-T.
What is your name?
Craig Bost, B-O-S-T.
And he's FL28220.
Yeah.
Okay, thank you.
I've tried to figure out the chat, so I apologize.
Okay.
And I'm
behind you, Craig.
So I will be emailing everyone the form.
okay. Thank you.
If for any reason you don't have a printer, if you want to type your name where it says sign it and then save it and send it back to me, I will accept that because I know some people just don't have printing capability working from home.
We just got the sign-in sheet to work. Impressive.
And listen, folks, if all else fails, send me an email. I'll make sure you get the form too. So
yeah,
we'll make sure it happens. Just let me know. I'll forward it to Paula, or I'll take care of it myself. No problem.
Thank you, Tom.
How are you, Ann? Haven't seen you in a long
Well,
time.
good. I'm retired, so it's more complicated because nothing seems to be working for the chat or anything on this. So obviously I haven't practiced enough for things that need signatures back.
Don't you have a 16-year-old grandkid that can help you out with that?
Well, actually, I have a brand new newborn grandson that might be going home from the NICU unit today. So I'm very excited about that.
Good, good.
So anyway, I'll just stay on. As long as Paula will send it, I'll leave. I'll go ahead, and as long as I get an email, that's great. Thank you so much, Tom, and everyone at NAFA. Appreciate it, especially Craig.
Our pleasure.
Good to see you.
Okay, thanks. Oh, what's that?
Good to see you, Ann.
Okay, take care. Thanks, Craig. Appreciate it. Bye-bye.
Do I sign here?
You can write your name and then you can save it, or you can print it out and I'll sign it and I'll scan it. That's it.
Oh, I have to physically sign it.
You don't have to, no. You don't have to sign it. Go ahead and type your name.
I did.
And then
If anybody's just hanging on waiting for me to email the form, I'm not going to do it until I'm off of this Zoom call. So it will be a while, but I do have everyone's email addresses unless you didn't give me, everyone who's left here, I can identify who you are. So, and I have email addresses for each one of you. I will be emailing it out shortly.
All right, I'm gonna bail off, gang.
Okay, Craig, thanks very much. Really appreciate it. You and I'll chat a little later.
You bet.
Well, quite a few people were able to download it because my phone keeps beeping, showing me in the forms back. I've probably gotten about 20 of them already.
That's
Yep.
that's probably a good thing, huh?
People, including Craig, on for CE. That was really good. That was a nice turnout.
It was. I saw 89 at the maximum point. That's a pretty good turnout. High percentage.
Yep, that's very, very good.
We found that if you get 2/3 of those who registered, that's pretty good. So this is close to 90%.
Absolutely. And I was, even though I was trying to record who was here and who wasn't, I was still listening, and it was quite interesting.
Yeah, it is.
As a consumer, this is interesting information for me to know.
I'm going to talk to Craig and maybe refile and do this again in another 30 days or so.
Yeah, it's
got a lot of good comments about it.
Yep. Well, I belong to the Chartered